Government officials of ranking 10 have been granted immunity from the at the siren. Any, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all. A test. This is your emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government. Weapons of Class 4 and lower have been authorized for use during the purge. All other weapons are restricted. Government officials of ranking 10 have been granted immunity from the purge and shall not be harmed. Commencing at the siren, any and all crime, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all.
All right. Yes. What's going on, man? Market turned around, got ugly fast. Don't buy at the open. Open's for crackheads and day traders. Unless you're a crackhead or a day trader, shouldn't be buying at the open. Amateurs at the open. Pros at the close. It's an old Wall Street saying, man. See how it goes. Sometimes I make moves at the open. Not often. I usually like to wait till around 11 o'clock to see how the market's gonna go. Like to see how it's gonna go, man. I hate green opens. Market opens green, that sucks. How do you know if it sucks? Because everyone that's new in the stock market likes it and gets excited. So if the guy that just came in likes it and gets excited, do the fucking opposite, okay? Because that person hasn't been in long enough to realize that, okay? So pretty much do the opposite of what you were thinking usually is what makes more sense in the stock market. Sometimes, it doesn't work like that. Sometimes it'll jump and go, but rarely. Still not a catastrophe, even though we are above it. Let's play it again. You guys need to hear it.
A test. This is your emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government. Weapons of Class 4 and lower have been authorized for use during the purge. All other weapons are restricted. Government officials of ranking 10 have been granted immunity from the purge. Harmed. Commencing at the siren, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all.
I love that. So, we see this is Bitcoin. Bitcoin's been kind of leading the way. I've been talking about that. Was talking about that yesterday. I actually felt pretty good because Bitcoin was kind of holding this this zone here, this 21,500 range, 21,700. Probably should hold up there, Chuck. Wait till we get to stage 1. So we're in a stage 4 decline right now. If you do nibble here, keep it small. if you're buying into sell-offs, keep it small until you get a stage one, you know. Yeah, so we broke. So, I mean, we got to assume it comes down to at least the 200. And if that doesn't hold, you know, obviously we would go all the way back down to 16.5. Hopefully that doesn't happen. I mean, there's a lot of area right in here. Obviously, it could stop anywhere it wants, but there's a lot of sticky area right in here, which is support resistance stuff, you know. That's Bitcoin. Bitcoin has been the kind of the canary in the coal mine. It kind of led the rally up, and it's kind of been hanging in there, kind of has taken the rally down. So we'll see. It's the reason it's hard to play the short game. If we check in on the Qs opened up pretty good above the 20 and then just turned. So if you're a short seller, now's when you get short. It rejected the 20. Now it's turned down. So if you're a short seller, I would start pressing it. I'd start pressing it and get back in. You know, how far does it go down? I mean, if you're playing the short side, you're hoping it comes down into here. I don't know if it goes that far, man. I haven't been doing much short selling lately. I'd rather pick up some shares at this point. We've been doing some real short-term trading inside our Fast Money channel, and I kept trying to play the Qs to the upside, the TQ, that had been working, but now we're below, and it looks like it's just steadily dropping, so let's see. Hold on just a second. Let me close something out here. Complete disaster. Yeah, ugly, ugly. Yep, so, I mean, looks like we're headed down, man. So Qs are headed down. I wouldn't be in any big hurry to buy anything or add to anything. We'll see how long this goes. Be patient. Some of the things I started adding. Well, let's check in. Let's check some of these sectors here. You want to keep an eye on the spider sectors. Okay. The spiders. Close this window over here. I got multiple monitors now. Back to multiple monitors. I've only had one, so now I'm having to readjust myself being back in Texas here. Error, YouTube not receiving enough to maintain the video. Okay, nice. What the fuck, dude? All right. Let's click view all. So these are the 11 sectors of the S&P 500. Kind of give you an idea of what's getting hit the worst. We see insurance companies getting hit pretty good. Yeah, I mean, straight down now. You can go look top 10. You're going to know them, all the different insurance companies that make up the top 10. XHB, Spider Home Builder ETF, tried to break out this morning, turned right around, headed down. Still looks pretty good, to be honest. So what does that tell you? Come on, man, you're a smart kid. You figured out. You're able to pay your phone bill, match your socks. What do you think it means if the home builders are not coming down, but everything else is coming down? I thought housing was crashing. Remember, we were going to go into recession and house was crashing. And yet the home builders are not crashing. Thought we were crashing. Remember, we were going into recession. Interest rates were going to destroy the housing market. And yet the home builder ETF is not crashing. Insurance is. Now, nobody said anything about insurance. Insurance is in a free fall. That's weird, right? Have you thought about that? Is that too much? Might be too much for you. What about XLB? XLB is moving down. XLB are the materials, except GE was trying to break out, but GE is really an industrial. Materials would be stuff like Freeport McMoran, Newport Mining, Nucor Steel, right? These type of stocks. These type of stocks. These type of stocks. So If you go look at what makes these up, you're going to have some gold plays in there, some steel plays. These are the materials that make up a lot of the stuff you're going to need for what? Home builders. You're also going to need it for what? The industrials. So we come down. Let's see what else we got going. XLC Communications. Inside of here, what do we got? Facebook, Verizon, AT&T, Comcast, the big content, provide the streams and the runways for content. Meta, Google's probably in there. You can go look at what's in. It's an odd ETF in my opinion. To have AT&T and Google in the same one is kind of weird. But as we come down, as we go through, look at the XLE. It's coming down. We thought that was going to break out. We were trying to play it to break out. Instead, it's headed down. So we'll see. It's still above support. Maybe it'll change its mind soon. XLF, total free fall. Somebody said something. Total free fall. Now, this is a good thing, man. Come over here, type in dogs of the Dow. Are you serious? Come on now. I'll put it down. Let's check out the dogs of the Dow for just a second. If you go to the 23 list, these are the ones for 2023. We got Verizon, Dow, Intel, Walgreens, 3M, IBM, Amgen, Cisco, Chevron, and JP Morgan. So now I missed JP Morgan on the run-up. So as this comes down, I'm pretty interested in that. Got plenty of Verizon, got plenty of Dow. Intel's kind of shit the bed. They need to change this. This is probably about to come the Dow Jones Industrial because it no longer pays the same dividend. So it's going to be replaced by something else. We have Walgreens, 3M, IBM, Amgen. We just got a dividend payment on that. So Amgen's in a stage 1 and Cisco, Chevron. So if I'm always watching this list, but one thing you can do, let's see if they have it on here. If when you're checking the list, if you click current doggishness, it will check it today as if today was the start of the thing. So let's click doggishness, and this will give us a new sorted list. And I would hope it would take Intel out. You notice Intel's out? And what makes me mad is I just showed you something that could make you a lot of fucking money over your entire lifetime, and it probably just went over everyone's head. I feel like I'm wasting my fucking time here, but I'll continue to waste it. Let's see. Notice the difference. Intel's on there, but Intel lowered the dividend. So that brings them out of the dogs of the Dow. So if we come over here and click current dogs, you're welcome. If you click that, you're going to notice they're gone. Who's in? Coca-Cola, Johnson & Johnson. And if you notice, what's not on the list? Yeah, no, it would be a test, huh? Let's see. That would be a test, did you? How are you going to get on the private if you can't remember this, what we just did? Let's see. Yeah, Chase, smart man. JP Morgan's out, man. So that's current. So I imagine if you check JP Morgan, it's pretty close to Johnson & Johnson. So let's just pull that up for just a second. Woo! Look at Johnson & Johnson. It's just in complete free fall here. It's another B&B trade way below the 200. Free fall. It's now got a 3% dividend yield. Crazy. If we check JP Morgan, I'm sure it's still above the, let's check it. Yeah, see, it's still way above the 200. That's why Johnson & Johnson, if you sort the list in real time, came in. We got Coca-Cola replacing Intel in current doggishness. And we see even Coca-Cola's getting hit, even though the consumer staples are doing somewhat okay. Looks like the momentum to the downside is building up, man. Yeah, man. None of your friends ever told you about that? About the current doggishness thing? That if you come over here, you can sort it by current. So whenever anybody asks me, and you might pass this along too, whenever someone asks you like, hey, I'd like to get started in stocks, or what do you think's the best thing I should buy? I always point them to the dogs of the Dow. Like, go read this strategy, understand it, learn it, spend some minutes with it. If they're really smart, like me, they'll stay with it, you know, and they'll figure out all kinds of little things about it, okay? You can spend a lot of time on this dog thing, man, about the current doggishness, and you can really dig into this. And it's also, one, look at the dividend yields they're going to get. But a lot of times it's just forcing them to buy cheaper stocks they might not buy on their own. Now, again, we're not talking trading here, okay? We're talking about investing. And yeah, some of them are going to look bad. That's why they're on sale. I mean, that's why the stocks are on sale. Stocks don't go on sale because things are good. They go on sale because things are bad. So you got to keep that in mind. And sometimes people merge trading talk with investing talk. Like, oh, don't buy a falling knife. Okay, yeah, it's a good fucking idea if you're trading to the upside. Not the smartest idea as an investor. Now, I don't want to buy it as it's falling, but I am looking for bottoms. So it's different, you know, being in trading and investing. That's why I try to encourage people to have separate accounts so that you make wise decisions and you can get stopped out of your trades. But you shouldn't get stopped out of your buy and holds. It doesn't make any sense, especially with dividend yields like this. Jeez, why would you want to get stopped out? So anyway, we're going to stalk some of these new potential candidates that are popping up. So I'm always watching that. Like, this was the list at the beginning of the year, but if we click current doggishness, are there any that are making the list, even if they don't officially make it? You get what I'm saying? It's not going to be the official list to the end of the year. So as I'm watching this, I'm like, cool, look what it popped on. Coca-Cola, Johnson & Johnson. So really to me, there's like 13 of them now. And that's how, and throughout the year, I'm constantly checking that, by the way. So yeah, XLF, straight free fall. You might short that, it's racking it up today. Yeah, let's see. Let's keep going. What else we got here? Industrials. I don't know if you saw 3M or GE today. GE's trying to buck the trend. Now they try to fool you with that $97 price target. It's like $9 in real life. They did a 10-for-1 reverse split, whatever it was. The reverse splits and the forward split, these things always confuse people because the first day it kind of jacks up the balance of your account, and everyone who's new in the money flow goes into a total panic when there's a reverse split and it shows your account negative whatever. It takes a couple days to settle. Contrary to popular belief, the stock market is not in, while the market moves in real time, there's still a thing called settlement. And when you sell a stock, it takes 3 days to settle that stock. Even this is why if you sell it, turn around, buy something else, and then turn around and sell that, you're going to get in trouble because it hasn't cleared. And so you're buying new shit with money that hasn't cleared. Unless you have a day trader's account, they'll flag you on that. Did you know that? I hope you knew that. So industrials right now, we're seeing, GE's bunker than trend. There's some others out there. Probably, I don't know, I didn't look, but probably some others bucking it. I'm sure that's going to come down. I'd be surprised if it kept going. Technology, KLK, it's just now breaking the 20. So I don't know. I wouldn't get too bearish. I don't know. I'm always bullish though. So you say, why are you always bullish? Because everybody else is always bearish. Let's see. And if I tend to agree with a lot of people, something's wrong. This is the regular real estate. I do find it interesting that the home builders are not coming down as aggressive as the XLRE, which is the real estate sector, spider sector ETF. Let me say something about this, man. A lot of my stock only guys, like, I see guys that are they're into stocks, that's it, which is cool. I like stocks. They're into index funds, they're into this, that. They're not real estate guys. And then I see guys that are real estate guys, and that's what they do. They just do real estate. And a lot of times the two of them don't know jack shit about the other. They think they do, but they haven't actually spent a lot of time studying it. So you'll hear people that are stock only guys equating buying Wall Street real estate or stocks as the same as buying regular real estate. And it's literally like buying an apple and telling somebody it's a plum. They are not the same at all, okay? It's not the same thing at all. I mean, they are not at fucking all the same. It's like at all, okay? Nothing. They have nothing to do with each other. They're not operated the same. They're not treated the same for taxes. They're not leveraged. The four ways you make money in real estate have nothing to do with stocks that own real estate or REITs. They're treated different. You don't get the same taxation. You don't get the same leverage. You don't get depreciation. It is not the same at all. It is a sector inside of the S&P 500, and it is a sector inside of the economy, of course, and there are stocks that trade around it, but don't make the confusion or the illusion or delusion that you're doing the same thing. It's not the same at all. Let's see. It's like saying, well, buying Bitcoin's the same as buying gold. No, one's Bitcoin and one is gold. They're completely different. We talked about this. XLU looked like it was about to run up, man, but it looks like everything is coming down now. Bonds aren't even going up. So it looks like the whole world's being sold right here. We got a goddamn global collapse. Look, not really, but let's pump it up a little.
This is emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government.
That's Jerome Powell, by the way. XLV is trying to make some moves in my buy and hold, buying the MPW. This is a mortgage REIT with about 11% yield. That's on hold right now as the market looks to be coming down. So I'll wait for the next stage one and then pick it up. So like I wouldn't pick up anything here that's selling off, man. He says, good, think I'm a lifelong saver. Well, saving sucks, by the way. You need to be a lifelong investor. Unless you're interchanging those words. Being a saver is, what good's that do? Money's just going to go down in value. Now, if you're taking that money and investing it, that's pretty good. That'd make you a lifelong investor. But just saving money, you're just going to be a broke person with money. Sometimes you can be broke, but you got a few dollars, but you're still broke. My grandma saved a lot. She's broke. There's days that I ain't got no money, no cash, worth millions of dollars, no money. None. Like almost no money. Like concerned, like shit, I don't even know if we can go to that. Why? Because the money's invested, right? And obviously if we haven't invested, hopefully it produces a return. But I was saying this morning that I was saying this on a drive yesterday, and I was talking through this stuff about cognitive biases. People tend to have a lot of cognitive biases. So whatever you have experienced in life, you tend to bring that to the stock market or to investing, whether it makes sense or doesn't make sense. And you'll have these biases that you'll bring to the situation, And sometimes if you're talking about this kind of stuff or investing, then people think, well, you love money. And it's like, no, I really don't love money. Matter of fact, I get rid of money about as fast as I get it. What I like is stocks because stocks are more powerful than money. And real estate is more powerful than money because I get to keep the money and the money makes money. Get what I'm saying? So, it's And a lot of people think you're doing it for money. It's like, no, I'm not doing it for money. I'm doing it to get assets. So I need money to get the assets, because once you have the assets, it produces money. If you just like money, which most, you guys all think you like money, but you don't. Most people don't like money. What they really like is what money gets them, not money. Money's just pieces of paper. It's just shitty pieces of paper with germs on it. So it's not money that we like. It's the trinkets you can buy with the money. So the reason people are broke isn't a money thing. It's they like trinkets. They like plastic things. They like gold. They like cars, which is cool, but that's not money. It's what money can give you. If you liked money, you'd be like my friend there said, he's a saver. Well, then keep your damn money if you're a saver. So if you like money, you'll just hold money. I don't like money. I like assets that produce money so that I can spend the money on trinkets. Big difference. Yeah, I don't like money, man. I only like what money can get me. But money itself is useless. I mean, obviously there's times where you need a few bucks to, pay for some things. So keep that in mind. This stuff is super important that you understand in your brain, man, and say out loud. Let's see. XOP, more, actually oil's holding up pretty good here compared to a lot of sectors. Let's see. XRT. This is our retail stuff. Actually, still above the 200. Still looks pretty good. You're going to have Walmart. You're going to have all kinds of other stuff in there. Let's see. Target, Macy's. The one I've been buying is Kohl's. Checking on Kohl's. So if you go through and you look on my portfolio, let's go to the Peters report on page 18. This is how I think about building it out. Personally. Now, I got a video over here on the dogs of the Dow. This was the 2023 list. Like how I see and how I use them and how I do them. Priceless video, man. It's fucking free. You just got to click the button. So as we're over here looking at Pepsi, Southern, Verizon, you'll see, like, remember we talked about all of these are in a different sector on a, shut that door, Dan, and go through the other one. So if you start going through these, test yourself and ask yourself, what sector are these in? You could kind of write them down. So if I said Pepsi, what sector is that in? Right? Consumer staples. What about Southern? XLU, right? What about Verizon? XLC. What about MFA? Well, MFA is a mortgage REIT, right? What about AG&C? Well, that's a mortgage REIT, right? Oh, and I need to update this because we added MPW. But if you look here, the last one I added was a retail, and that was Kohl's. And then if you look, the two previous I've added. So I've only added 3 stocks in the last 6.5 months, 7 months to my buy and hold. Because a lot of these I've owned for years and years and years and years, and I'm just building on them. Because once you've built it out, then it's just a matter of adding to the ones that are on sale. And if you look, the last one I added, see where it says new money goes into stage 1 stocks, dividends are dripped unless position is extremely overvalued. Recently trimmed ConocoPhillips and added KSS, taking profits from oil to add some portfolio yield, because the yield on KSS was 7.5%. The yield on Conoco was 1%. So I have a video out there if you're on my subscription stuff about portfolio management. I have part 2 coming here shortly. Let's see. Recent ads of closed-end funds, GLV, USA. So you should know what closed-end funds are. In addition, the addition of UAN and ZIM has really added some volatility to the dividend income of the portfolio. I just noticed I don't have ZIM up here, do I? So I just lied. I actually added ZIM. UAN's one from Discord. Never put that one out publicly. I see the Wealth Squad snagged it, though. You're welcome. Let's see. UAN. Big dividend payer. Look, it's up today. Had a pretty large position in this one. This one, the dividend this month was $10.50. So, Money Flow Gang, we've been in this one for a while. Yeah, huge dividend. Last year, this stock paid $27 in dividends. 27 bucks. Think of all the dumb shit you were doing last year and spending money on. This thing pays a $27 dividend over the year. Let's see where it's at. Think of all the dumb shit you spent money on. Look where this stock is at. Paid $27 in dividends. That is a lot of dividends, guys. And the price, it was back here. So it was in the 80s, and it ran from 80-something dollars up to 140, then back to 70, which that would suck, right? That would suck. It went from 140 all the way to 70. Can you guys handle that? 50% drop. Oh, by the way, it paid out $26 in dividends. $26, guys. It's already going to pay $10 this year. $10 in dividends, but it's very volatile. What's up, Brittany? It's very volatile. So yeah, the dividend changes too, by the way. Next one could be $1, and then the one after that could be $15, and then the one after that could be $9. So similar to Zim. It's all over the place and pays a high dividend. And look at Zim's getting smashed today. So those are risky stocks. I've talking about them. People can't handle these things. So talk about them inside the group, but outside the group, people just can't handle them. They're too much, man. Too much. Let's see. XRT. XLT. We got the Spider Telecom. You're going to have Verizon in them in there. But you're also going to have like AMT. You're also probably going to have in there T-Mobile. Things like that. How come the dividend changes? Are you serious, bro? Because the amount of money they make changes. So the board, based on how much money they make. Some businesses aren't very, it's not the same amount of money every day. So they like to pay out a lot of dividends, but in order to do that, they got to make money. So if they make a lot of money, they pay out a lot of dividend. If they don't make much money, they don't pay much dividend. Let's see. That's how that works. The dividends change. That's it on theirs, man. So I haven't really done much today. I had a little bit of Google hoping to play the breakout. That was around 10:30, and then it breakout just fell apart, man. Let's see. Still long gold. It seems to be hanging in there. Let's see. Still long nat gas. Haven't cut it yet. I might cut it soon. I don't know. We'll see. My position is not that large, so we'll give it a minute. With everything selling off makes it less likely that I want to sell nat gas just yet, man. So we'll see. What else? Where's Ford? Yep, Ford. Uber's come down pretty big. I don't know. I don't sell any Uber. So, I don't sell any Uber. A lot of cryptos coming down. Matic's top of my list. Matic, ADA, ETH, Bitcoin. So we'll see how that plays out. A lot of you guys don't even have any crypto. Got purged out the first time, man.
Weapons of Class 4 and lower have been authorized for use during the purge. All other
If you sell all your Bitcoin, you can buy it back now.
weapons are restricted. Of ranking 10 have been granted immunity from the purge.
That means Nancy Pelosi can trade stocks when you can't. So all you guys that got blown out of your crypto, which is like everyone on my live, you can start buying it back now. Your mama will let you. Call your mama and say, hey, mama, can I buy some Bitcoin? I know I fucked it up last go round, but I'd like to get back in.
And shall not be harmed. Commencing at the siren, any and all crime.
Please, Bitcoin. Please, I promise not to sell it all this time. You can do it, guys.
Be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all.
May you all go buy a ledger. You can send dirty pictures on Snapchat. Sending nude pictures of yourself on Snapchat. Can't figure out a ledger though. Sending boob shots on Snapchat. Can't figure out a ledger. Whoa, way too complicated. Got Uber downloaded, connect your credit card, figured it out, riding around. Like, can't figure out a ledger though. That would be way complicated if we had to do that. But Gerald, look at all the dumb apps you have on your phone that you figured out. Can't figure out a ledger though. Oh, it's so complicated. I'd have to click all the buttons. Yeah, guys. I'd figure it out. About once a week, I'd sweep everything over. Don't make it a big deal, okay? Not that complicated if you want to play. Don't even have to have that much money. Check out Lyft. Lyft's going down big, man. This one surprises me, man. I'm going to be honest. It's going down big. I don't have a huge position, so not that big a deal, but I am surprised. But it's a weak stock, man. Anytime there's a weak stock, you're going to have these kind of things. So it's definitely wounded, man. Anytime shit's wounded, when things get bad, it's going to get more wounded. So let's check in on CVS. I like CVS Pharmacy, but it is falling like a rock. So see. Yeah. So here's an idea. If you ever get back in crypto, don't stake your shit and don't take loans against it. Don't borrow against a non-productive asset. As a general rule, man. Not saying there's not times, but it's not something I would look to do. Let's see. Adam 672. Come on, man. Yeah, man, that's it, man. I don't know. I'm just watching here. We'll see what happens. I'm looking at the TQ here on a 3-minute chart. Was trying to do some day trading earlier, but it's all about the SQ right now. I'm actually starting to get a buy signal on the TQ, but the last 3 have been a disaster. Why not stake? Are you serious, bro? You didn't? I don't know if you didn't fucking notice the total shit show collapse in the crypto markets the last. Yeah. Everybody's staking their money. How do you think they're paying the staking yields? So where do you think the money's coming from to pay you? This is the question I used to ask every 20-year-old economic expert that was into Bitcoin when I would meet them. How do you think buy it from me and then you give it back to me? I'll pay you a little bit of money. Now I'm going to pay you with your own money. That's called staking, bro. No, it's not. Then why do you think all those banks, all these? I mean, what do you think they were doing, man? Well, I mean, I don't know, David. Ask you. You're the one getting. If you're getting money staked, I mean, I'm gonna ask you just like a big adult question. Where's the money coming from? So if you own a rental property, the renter is paying it. Where's the money coming from? You're like, oh, well, it's from loans. Okay. Well, last time I checked, they're loaning people on the crypto. So they're putting up crypto. They're putting up more rocks to get a loan against the rock to pay the guy that bought the rock. Now, if the coin made money, that'd be a different conversation. Like if the coin actually makes money doing things like transfer fees, holding fees, like people transfer money from here and that, then it makes total sense. But a lot of people can't explain where it's coming from. But as long as you can explain where it's coming from, then it's cool, man. And there is some honest money being made in crypto. Oh shit, hold on just a second. I gotta buy a signal here. I'd show you, man. Maybe I'll show you, man. Come on, man. Let me get in it first here. Let me show you what I'm looking at. We gotta be quick though. You guys are messing me up, man. There we go. We have to keep a tight stop on this though. Market trends to the downside, so I'm a glutton for punishment. But all the action's been to the short side on this. So if we pull up the SQ, let's pull that up. And if you were trading on the shorter time frames, say 15 minutes, look at this. It's been a pretty nice play, man. This is where the action's been. So you had nice moves here, money flow, run up. So if you look at this, it's like, this is the money flow, right? Stage 1, 2, 3, 4, 1, and then what? That's the run up, man. So if you flip this, which would be the TQ, now I say this all the time, man. Some of you about to blow your mind. That right there is a 4, and that right there is a 2. And you're like, what do you mean? This is the SQ. This is the inverse to the Qs. So if I go the other way, what do you see? Right? Oh, let me do 3 minutes. Sorry. You're seeing the opposite, right? Was I on 3 minute the other? So these moves down are going to be the opposite because it's going to be, what was I on there? Pattern done. Oh, it was on the 15 minute. Sorry, I apologize. I was going to say that don't look right. So look at the TQQ on the 15 minute. You're going to see the opposite. So you see the opposite. Stage 1, and then you got a little bit of a run up, and then, right? And then bam. So you had a stage 4 decline instead of what we just saw, which was the stage 2 run up on the other side. So a 2 is a 1 and a 1 is a 2. I mean, a 2 is a 4 and a 4 is a 2, man. It's just one side's going up, one side's going down. There's not much difference. Does that make sense? So when you're watching these cues, the action's been to the downside. That part can be confusing. It can be confusing jumping back and forth unless you have some way of telling you which side of the money to play on, or what time frame. Because right now, this is, if we drop this down to say a 3 minute, which is what I've been playing on, look at this Q run, man. It's just been brutal. If you were on the other side. So as you look at this, if I was playing the other side, these right here, what you're seeing, these are little, those, the opposite of this is what? Breakouts on the other side. So there's 3 minutes on a SQQQ, right? So if we flip it, what you're going to see is to the upside on the standard direction, we had a lot of fake breakouts, you know. So you could see them here. Attempt to break out, attempt to break out, attempt to break out, and it didn't, you know. So if you were on the other side, maybe you don't even need moving averages, you know. You can see the moves down, man, but you want to be a short-term trader, it's not looking good. Not to the downside. And now this, watch how fast this has already turned. So that was just a second ago, right? Bam, big pop-up move, a couple thousand shares, you're up a couple $100. Just like that, turned around. And now you're down a couple $100, just like that. That's the dilemma, right? So, but we're in a down move, man. So probably want to be trading it from the other direction. That's all I got, man. Hope everybody's doing okay. I'm not. I wouldn't be jumping out in front of too much here, man. Save your powder. See what happens and see what sets up, man. Anybody short, congratulations. You're doing pretty well today.
Is married. His wife.
What's up, YouTube? Let me close this here. Let's leave this going for just a second. See if this turns around. No, tried to. See where it tried to put on a little bottom, tried to turn, which could have been a little base forming, which is how I would play that, which is what we saw right here, which is what you saw here and here. And that's the problem with it, right? Like when you're trying to short-term trade in real time, see if that holds. But probably not. It's probably headed down, man. You the I'll leave this on for just a second. See it with.